Um, Looking forward again to 2024, Emily, what's your biggest cause for optimism?
Yeah, thank you. So, in our markets, there's a couple of areas where I think we're really optimistic. I think if I was to kind of take the three regions of the world where we invest, I think in Southeast Asia, we're really optimistic about the manufacturing shift we're seeing out of China into some of these countries, their ability to start to take market share. You would have to see a very small amount moved out of China for it to be very meaningful for the countries it's going into. So I think that's one area we're very optimistic. I think if you come to South America, we're quite optimistic that we will continue to see sort of normalization of economic policy, rates coming down. We think that mining continues to do quite well in some of these countries, and more EVs, more lithium, quite positive on that region. And I think if you come to the Middle East with just the continued recovery in the housing market in some of those countries, continued move to create a bigger financial centre there, I think is really giving some of those countries a lot more viability and global market share in financial services business than we would have expected. And I think that's very exciting for that region and moving business there, global business there as well.
That sounds absolutely great. James, what are you optimistic about?
I'm optimistic about everything, Annabelle. You have to be optimistic.
Ooh.
You have to be optimistic as an equity investor, but you have to be realistic as well. So what are we most optimistic about? Well, not that our view is anything to go by, but I hope that Alex and Emily will be pleased to hear that we're optimistic about valuations for equities, particularly in the UK and in emerging markets. Those are our sort of preferred regions short term. There's a lot of great companies in the US, but valuations are a bit high. We're very optimistic about discounts on investment companies. I think there's a tremendous investment opportunity there, particularly some of those in our portfolio, but also more broadly. I think there's a chance that growth surprises on the upside. One of the things that helped central bankers this year was that China didn't grow. It came out of lockdown. And had it come out of lockdown, out of like a sprinter out of the blocks, then, that could have really impacted inflation in 2023. So what we might see is economic growth attenuating or perhaps even mild recession, but China coming through in 2024. So, that's a potential positive. And finally, I'd really like to think that after a year of stagnation, we see a pickup in investment in the transition to a greener economy, because there was some stagnation in 2023, and with interest rates coming down in 2024 or beginning of 25, we should see a better environment for investing in the infrastructure around efforts to meet climate change. One caveat: US elections, that could be a withdrawal from international affairs by President Trump, and a reversal in the efforts of the US to make major steps in climate change.
Well, optimistic but realistic sounds like a good scenario to me. I'm particularly pleased you're optimistic about those investment trust discounts and the opportunity they present. Alex, what are you optimistic about?
So I think as a value investor, it probably comes as no surprise, but it's valuations again that make me optimistic. The fact that we're seeing such a low valuation on the FTSE All Share, about sort of 10.5 times earnings, and also particularly on the trust, more like about 8 times earnings. If you look through the just over 10 years that I've been on the trust, the lowest we've ever got on that ratio is about 7.5 times, which was a couple of months ago. So we've moved up a little bit, but we're very low versus history. And then obviously with discounts in the space being wider, we're on about an 8% discount today. You actually, as the end investor, get in an even cheaper valuation because you can buy the portfolio at a discount. Whereas on average, we've traded on more like a 3% discount over my tenure. So I guess a cheap market, an even cheaper trust, and then the trust available at a discount looks at as a value investor something that's really, really attractive. And so yes, there are definitely some risks on the macro and political front, but I think the margin of safety that you get by investing in the UK and in special values is really, really interesting today, and it's that gives me the biggest hope for optimism in terms of the outcome in 2024.
So it's a double whammy, a cheap market and a discount on the trust. Well, that sounds good.